Welcome to the Alternative Investing Club. Today is July 19th, 2024. My name's Daniel Holmlund. Today we're going to be talking about, and frankly, just having an open discussion about the club fund and what the goals of the club are, what the goals of the fund are, and how those align, and how the club members can participate in not only suggesting potential investments for the fund, but also directly participate in how much we allocate towards each of those investments within the fund. So I spent a lot of time thinking it through, trying to make sure that we as a club can really participate in this together, and it's not just me or a group of managers up here suggesting and leading all of the potential options, but really incorporating club feedback in order to get a strong, diverse set of candidates that a large percentage of the people within the group approve of. So I will stop one more time before we get started. Any questions? I see we have 34 people in here. It's a little lower than normal. First of all, actually, thank you, Jellen. First of all, actually, I want to make sure that everybody's on the call here. If you have appreciated this club, if you've gotten a lot of value out of the speakers that are in this club, please invite somebody else to this club. When I am done with this initial phase of the fund, my goal is really going to be to increase the size of the club. And that's going to be mainly on my end through posting on social media, through putting together short clips of our meetings that we've already put together. But we're going to start promoting the club a lot more and growing the club. We've been, oh, Brett is here. Brett, I stole some of your slides. Just heads up. Uh, they'll be towards the end of the presentation. So if you would, if you've got any value out of this club, please invite another person, and let's grow this club back up to where it was a few months ago, where we were breaking 100 people in each call easily. So please do that, and actually, Brett, frankly, I don't know if you're in a position where you want to talk to DLP Capital, but when we get to the slides about you, if you want to, I will open the mic to you.
Yeah, no,
All
would
right.
be happy to.
Okay. So let's start on here. First of all, the Alternative Investing Club Fund. This is a 506c fund, which means that it is for accredited investors only. Unfortunately, in a club-like environment, in order to be able to publicly talk about the deals that we're putting into the fund, it has to be a 506c or some version, some under some regulatory environment where we're able to publicly speak about it. In the past, this club has had 506b syndications that we've talked about, and those are private placement. In a 506b, you're not allowed to publicly advertise, um, and you can only bring people into the fund through that you already know, that you have a pre-existing business relationship with, or through this club, or through some other means. With a 506c fund, you're allowed to publicly advertise it. We can take out a billboard, we can put it on social media, we can paint it on a park bench. But because it's open to the public, the SEC wants to protect investors, and it's only open to accredited investors, people that the SEC thinks are qualified to participate in what would be considered a more complex financial transaction. So there are limits on what we can and can't share, and who can and cannot be within this, and this is limited to accredited investors only. Having said that, I have reviewed quite a number of deals recently, and there are some decent 506b deals that are out there, and I haven't put a lot of focus on it recently. But one of my pledges to you, if you are not an accredited investor in this club, is that we will be bringing out and participating in 506b deals that you are able to participate in. And if you are able to push and get to the point where you are an accredited investor, you can always participate in this either now or at a later date. So here's the agenda, and this presentation is going to be really short, I hope. Um, so there's going to be plenty of time for questions and feedback at the end. And we're going to just get right into it. We're going to be talking about the Alternative Investing Club goals, just to go through and have a reminder of why we're here, why we're doing this every week, and what the goals of the club itself are. Then we're going to talk about the fund itself and how the fund plays into, or at least satisfies, one of the main criteria of the club goals, which is providing opportunity to the club members. Then we're going to be talking about the fund. I should have switched them around. We're next going to be talking about number 4, investment criteria. So the fund investment, we're going to be talking about what types of investments we're going to be targeting, how we're going to structure 7 to 10 different asset class types and put them into a single fund to have a highly non-correlated private equity investment fund. Then we'll go through the particular details of the fund. What's the minimum size? What are the expected hold periods? What are we targeting in terms of cash flow, appreciation? What's a redemption period, and what does that look like? After that, we'll talk about the first 3 groups that we've identified that we want to invest in through the club fund. And Brett is actually with the first of those, DLP Capital. He's there, and he may speak to us. I didn't know he was going to be on this call, but you're welcome to say whatever you like. We've got 2 slides on DLP Capital as the first person, and frankly, right after this call, we're going to be sending out a call or an email with the instructions on how to invest if you're interested in putting your money into the fund and doing that first investment with DLP Capital. And then we're going to reserve plenty of time for questions and answers. All right, so our mission statement: the Alternative Investing Club is changing the nation by providing paths to middle-class families to invest in institutional quality investments that build thriving communities, responsible energy, and support growing Main Street businesses. So the Alternative Investing Club is really going to be focusing on real estate, energy, business equity, also potential other areas, but those are the 3 core that we are focusing on right now, and where I see a lot of opportunity. The goals of the club have been the same for quite some time. The first and foremost, it's to educate people and to allow them to take control of their own financial futures. I can't tell you how many wonderful little emails or texts or good words have been sent my way from people in this club that have purchased their first investment home, or have purchased their first syndication opportunity, or have gone into a debt fund, or bought their own rental home. If you've done that and you haven't sent something up to the club, I would be happy to post that on the club. And frankly, it's fuel to my soul to hear people that are actually taking the education that's here and taking action from it. So if you do have a story about how the Alternative Investing Club has helped you, please email it my way. I when things get hard, I go and read a file that has all of those notes, and I say, this is a great thing to do. And so I really appreciate when you send those. But this club has had speakers, everything from the vice president of Fannie Mae to people that run debt funds, people that run short-term rentals. We've had mortgage note investors. We've had all types of investors that are here, including ones that are not just real estate. We've had some oil and gas. We've had, as you'll see, we've had SaaS companies that come in, or funds that buy SaaS companies come in. We've had people that invest in um, whiskey funds where they buy barrels of whiskeys and resell them at higher prices. I'm looking to actually get an art collection fund in here to present as well, and they invest in art through a funding mechanism. So we've had a huge variety of people from different walks that are all actively involved in investing, and they come here to the Alternative Investing Club to tell their story and to share about how they invest, and of course also to invite you to invest with them and take a look at what they do. Of course, the club here is here for educational purposes, unless stated otherwise. And that's actually going to bring us into one of the strategies that we're going to be using with the fund. and that is to bring in people we specially mark as club fund speakers, of which DLP Capital is one of them. The next thing that we talk about is opportunity. So that's where the fund itself is going to come in. Education is great, but education without action is not as great as it could be. Action is really what is important, particularly when you're planning your financial future, taking concrete steps and following along with it, having a plan of action in order to reach your goals. So the opportunity here is to the club itself is trying to make it easier for working professionals, people that are busy, to get into private equity or alternative investments that are non-correlated with the stock market. And one of the ways that we're going to make that easier now is by rolling out a club fund. And the club fund is going to give us the opportunity to diversify across different asset classes, geographies, operators, and strategies, fund types. Um, and the point of that is that the fund itself will be a way that we can go to large institutional groups like DLP Capital. Um, their minimum on most of their funds, I believe, is $200,000. The club fund here at the Alternative Investing Club, our minimum is $25,000. So what that does is it gives us the opportunity to pool our resources together as a club and to go into these larger institutional type investments. And that's the value that that the club fund brings. Lastly, building legacy wealth. This is always something that I think should be on every it's on a lot of people's minds. And I think people who are driven and have goals in the financial realm think about, once I have met my financial goals, what am I doing with this once I'm not here? So building a legacy, being able to pass it on to your children, to your heirs, whoever that may be, is something that we should think about and contemplate while we're setting up our strategies as well. So how does the club fund facilitate those goals? And first of all, my apologies to Brett. I stole this directly off of DLP's slide deck. But it's a comparison between real estate funds and syndications. And it basically just says that in a real estate fund, the main difference between a fund and a syndication or a fund and a deal is that in a syndication, your capital is usually invested within a single asset. You're responsible for selecting the project, which means that you need to do the due diligence on the operator for that particular project. You don't really have a lot of portfolio diversification per se, unless you have several syndications, but that obviously gets expensive very quickly. And your capital is not spread around as much. It's not as diversified. Now, there are advantages to being diversified and there are disadvantages. And sometimes it's absolutely a great thing to go with syndications. Sometimes it's a great thing to go with funds. There are trade-offs. With a real estate fund, you can diversify across a larger number of deals, right? Your $25,000 is going to go into 7 or 8 different asset classes that are non-correlated, that are not necessarily driven by stock market pressures. So you can, with a smaller amount of money, have a larger amount of diversification within your portfolio. You're also not responsible for selecting the property to invest in. A single investment into the fund can help you diversify your portfolio, as capital raised in funds is used to invest across multiple asset classes. So I want to bring out here that if you're one of the initial people to invest in the fund, and then the fund makes a investment into DLP Capital, for instance, just because you invested in the fund early and there's one investment at that point doesn't mean that later on the fund, of course, will invest in other assets as well. And you're automatically, part of that diversification, no matter when you invest in the fund. So if you invest at the beginning and we eventually invest in 5 different assets within the fund, that person who invested at the very beginning is still diversified across all 5 assets. The same goes with somebody who invests at the end of the fund. It's called an evergreen structure. And what that means simply is that the fund itself is something you can buy and sell into and out of. It provides liquidity, but it also provides diversification over all the assets that the fund owns. All right. Um, One of the other benefits of a real estate fund is the ability to pool capital together and to have a better negotiating position with potential operators. So, for instance, if our fund decides to come together and place $500,000 or $1 million within a deal, oftentimes people that are offering these investments actually have tiered structures where they say, hey, if you bring in $50,000 to $100,000, we'll give you this return. If you bring in $1 million, we'll give you a better return. And that tiered structure sets up the points at which they would like to basically negotiate. If they don't have a tiered structure, we as a fund do still have the opportunity to come to them and say, we're bringing you $1 million. We'd like a slightly better cash flow or a slightly better pref. Some of those negotiations are, well, those negotiations are fairly common actually. And so being able to pool our resources together means that as a club, we can enjoy the benefits of um, a higher potential return on an investment. All right. The goals of the fund. So first of all, the initial fund that we're putting together here, the initial raise on the fund is $5 million. And that's actually a fairly small fund. DLP's Capital's fund is $2 billion. Their credit fund is $2 billion. Their debit fund is $1 billion. So they're a very large institutional fund. This initial fund is going to be rather small. We're going to make it very driven by the club, and we're going to target 7 to 10 non-correlated or different asset classes. So, for instance, DLP fulfills the asset class of a debt fund. DLP is going to be our debt fund. We're going to be looking for other types of asset classes. And as speakers come into the club that have been pre-vetted and declared as club fund speakers, we'll give the people within the club the opportunity to say, I'm interested in investing in these people or I'm not. And if we get enough people within this club in order to meet their minimum investment, then that investment can be placed through the fund into that particular investment opportunity. And I'll talk more about this later, but that's how the club is going to participate in being able to determine the allocations within the fund. So for instance, if a lot of people like investing into a solar farm and we have a large response to that, we may place more money into a solar farm than potentially an oil and gas deal. It just depends. So having the club members be able to determine that with basically their own votes in saying we want to put money in or we don't is how we're going to drive the allocation within the fund. Having said that, there might be some times where we need to rebalance the fund, and I'll talk about that a little bit as well, and how DLP Capital actually plays into that strategy. Next, the AICF, the Alternative Investing Club Fund, uses collective bargaining in order to make preferred arrangements with best-in-class operators. I had just talked about that. But it's always great to be able to get a slightly better deal because you're part of a large group. After a potential investment operator passes due diligence, they're introduced to the club fund as speakers. All speakers can watch the operator's presentations to understand their strategy. So the first three people that we're going to introduce here later in the slides are DLP Capital, Webb Street, and DW Oil and Gas. All three of them have already presented at the Alternative Investing Club, and you can go back and watch their presentations. In addition to that, I'm actually working with all three of those people in order to put out extra educational material, so that if you want to go learn more about how DLP does their debt funds and learn more about debt funds in general, there's going to be a course that you can access on the Alternative Investing Club website that will walk you through all of that. So I'm working with each of the club fund speakers in order to create specific educational content and to create a course to help investors understand what a typical or how they operate in this particular asset class. So it's education. The goal is after you're done with the course, you'll understand, everything you want to know about a debt fund. Next, tax benefits are passed through to the investor. This is actually going to play into the oil and gas deal quite a bit, and I'll talk more about that later. The tax benefits are significantly different, and as it turns out, we're not going to be able to include it in the fund itself, but we will create a separate entity and run the oil and gas deals through a separate entity. But in general, the tax benefits of real estate, the tax benefits of being a passive investor are all passed through this fund to the investor. And it's designed to make it easy for investors to say yes by targeting institutional quality investments with low fees. And the point here is that if you see a particular club fund speaker that you like, and at the end we put out a call for capital, you can put 25,000 into the fund. But if you see another speaker late, a month later that you also like, you can put 25K in then. So it's not a one and done deal. I'm trying to keep the minimum low enough that people could do it more than once and do it based on their reactions to the speakers, and that in turn is going to help the fund determine the allocations within the fund and how much each investment, how much capital we're going to place with each investment. All right. Any questions there, actually? Let's pause. And my apologies, I'm not really monitoring the chat since I'm talking. Maybe if somebody wanted to step up and be the moderator there. But take yourself off mute if you have any questions right now. Okay. Yes, Dennis, a solar farm would be great. I've been on the lookout for solar farms and wind farms. I think that's an area I don't have enough expertise to know, the profitability of that yet. It's something I want to dig into. And I would love to include one within the fund. All right. So key investment strategies. Our first one is real estate debt. The next option that we're looking at is solar, wind farms, carbon credits, clean energy. These are all sectors that are typically associated or often associated with private investment that within the current economic climate are the sectors that I feel are doing better. And I think a lot of other investors who are actively in this space have called out these areas as being areas that are growing. So real estate debt, clean energy, industrial real estate, oil and gas, business equity, RV resorts. So the reason why I've called all 6 of these out here is because I've actively been reviewing deals from all 6 of these. And there are good things to be had in these sectors. And we're going to try to identify one in each of these sectors that we want to have be the person who's running that within our club. Other areas that I'm open to looking at, I'm not really a Bitcoin person per se. I know a lot of people here are. But if you people in the club can introduce me to a Bitcoin fund that you think makes sense, I would happily look at it. So just in my own personal investing, I haven't invested in Bitcoin. But that isn't to say that there aren't good deals out there in the Bitcoin realm, and vice versa. Like any sector, there are terrible deals that are out there. So if you know of a good Bitcoin deal, send it my way. I'd love to look at it. Other possibilities that I'm not actively looking at yet, but that are kind of on my radar are art funds, investing in vineyards. We actually had what are their names? Tracy and Hubbard. Tracy and Keeley Hubbard from the Hubbard Capital Group. They came in and they talked to us in 2021 about how they were using syndications in order to purchase a vineyard lands in Northeast Texas, and they were syndicating their vineyards. So that's a potential possibility. Car washes, credit litigation. I'm sorry, credit litigation. It should be litigation finance. Royalties of different types, and other potential, funds and opportunities. There are a lot of creative possibilities that are out there. I'd never heard of finance litigation before, for example. and it's definitely an area worth looking at. So if you know of other types of investments that the fund should consider, this is driven by the club, please send it my way and I'll review it. And if it's something that I think meets the criteria of the fund, we'll bring them in as a club fund speaker and basically set it before all of you as to whether it should go into the fund or not. All right, the club fund speaker process. So as we get speakers that have different deals, we need to set up a process for them and make sure that everybody understands when a person is speaking just purely on an educational basis and when a speaker is speaking because they want the club itself to invest with them. And so the process for bringing in a club fund speaker is going to be, you guys can suggest it to me. I will be actively looking out there for people that are doing it. I'm also potentially looking for a partner who might work with me on the fund, and in that case, you could suggest it to them. Um, but in any case, a speaker is found. They're going to go through a due diligence process on my side before they're ever brought to the club. I don't want to bring in people who are not people that I wouldn't invest who I would invest with personally. I want to bring in people who I would invest with personally. And actually, I have invested personally with most of the people that have been introduced as club fund speakers. I don't necessarily say I did invest with them, but I would invest with them. And frankly, I want to invest through the club fund. That would be my preferred way of doing it. So these speakers are going to go through a vetting process. A couple of the key things that we're looking for is what is their cash flow? What is their appreciation? What's their main strategy? What are their tax benefits? In particular, in this fund, we're going to be looking at the liquidity quite strongly. As you'll find out later, the minimum hold in this fund is 3 years, and an expected hold would be about 5 years. And having said that, though, I understand that syndications are not liquid. And I'm trying to make it so this investment is more liquid. And so this is an evergreen fund where after a 3-year period, you can continue to hold it or you can sell it. So you're not forced to in a syndication, the money's put into a property, the property's improved, and when it's finally sold, the capital or is returned to the investor. And there's no choice on the investor side as to when to bring that capital in and out. In an evergreen fund, after a 3-year period, you have the choice of when you wanted to exit the fund. And so I think that's a big advantage. I think that's something that a lot of people in this group have wanted, a little more flexibility with being able to determine when they can move in and out of the fund. So, and what that means from the perspective of the investments that we put into the fund is that if we have a 3 to 5 year period for the hold and people want to, go in and out of the fund after that, that means that we need investments that support that particular type of liquidity model. So, for instance, this fund won't have any opportunity zones in it. Why? Because an opportunity zone requires 10 years of holding before the tax benefits go into effect. If all the fund held were opportunity zones, then nobody could get out before a 10-year period. If we hold investments that have smaller hold periods, that means that there's more liquidity available. And of course, we want to balance investments that have smaller hold periods with investments that have larger hold periods, because larger hold periods do tend to give better returns than investments that have smaller hold periods. Smaller investments that have smaller hold periods have more flexibility in when you get in and out. So being able to look at what the current state of the cash flow is, the current state of the liquidity within the fund, the current state of the investments that are in the fund are going to help us narrow in on making sure that the criteria of the fund are met and the fund is kept as liquid as possible. DLP Capital is actually a very strong component of that. Their debt fund has a 90-day redemption period, which means that if the fund, if we put $1 million into DLP and we're receiving a monthly distribution from them in their debt fund, If we find out that there's a good opportunity in construction that's going to take 3 years before we receive any cash flow from it, we could actually sell some of the DLP, which is very liquid, and move it over into that longer term, potentially more profitable investment. We'll also do a call for capital at that time too, with the club as well. So there's going to be a due diligence phase. Once they pass the due diligence phase, the club fund speakers will be brought into the club. You're going to hear them present. You'll make your own determination as to whether you think that they are a good investment or not. I will send out an email that basically says, are you interested in investing with this group? If you are, you respond to that email, and I gauge what the investment is, or what the investment interest is. If the interest is such that we can get together enough people in order to make the minimum investment into that, people that put their money in at that point will have their money earmarked for that investment. And what I mean by earmarked is that, and I've got a walkthrough example in a slide or two, but what I mean is that if we raise $500,000 after that speaker, and the people that put that money in say that they put it in because of that speaker, we will take that money in the fund and allocate it with that speaker. So the more interest a particular speaker creates, the larger the fund investment will be within that speaker. All right. So funds are collected and earmarked for the speaker, and that capital is placed. And I got all these pictures here from the Speakers Hall of Fame, which I put inside the chat for everybody. So if you want to go see all of our previous speakers, and I'll be updating it this afternoon to include the last week or two, there's the link. All right, let's power through. All right, I'm going to go through an example walkthrough of placing 3 investments in the fund, or the fund investing in 3 investments. So number 1 here, the gray box here represents the fund. The blue boxes represent the individual investors. And so here we have club fund speaker deal number 1. They come into the club, they present. We send out an email that calls for capital. The capital, the email call results in 10 people that want to put 25K in each. That raises a total of 250K with speaker 1. That money is put into the fund, and the fund places that money with speaker number 1 and their particular deal. In this particular case, each fund member is going to own 1/10 of the fund, or 25K each. And the total investments owned by the fund will be 250K. Then when another deal comes by, club fund speaker number 2, let's say that they raise the identical amount here. There's 10 people, they each want to put 25K in. Well, in that case then, deal 1 and deal 2 will each represent 50% of what the fund is invested. So the fund will be equally invested in deal 1 and deal 2. And all 20 investors will also have equal, their benefits from the fund will be equally divided, between the 2 deals. The people that are investing own the fund owns the 2 investments. So each person here, 1 through 20, will have 50% of their capital in deal 1, 50% of their capital in deal 2 through the fund. Each member, the total amount in the fund is now 500K. Each member who put in 25K owns 1/20th of the fund, or 25K, and the total amount is 500K. Now let's say that a third speaker comes by and they do slightly better. They attract 10 people that are willing to put in 50K. Well, in that particular case, we're going to raise that money. We'll put it into the fund. It'll be earmarked for that particular speaker. We will, and this is, again, this particular speaker resonated better with this club. And that's why they have had more capital put into them, and they'll have a larger portion of the fund. The fund's allocations will give a larger portion to that particular individual. I like having this all club run. and determined by the club. And so in this particular case, then the AFCI should be Alternative Investing Club Fund, places 500K with speaker 3. The fund then owns 3 investments. 25% is in deal 1, 25% in deal 2, 50% in deal 3. Each investor, depending on how much they put in, will either be a 2.5% owner of the fund or a 5% owner of the fund. And you can see here how the allocations of those people work out. At this point, the total investments of the fund is $1 million. So that's how the club is going to interact with the fund. They're going to be able to determine with their dollars what the allocation of any particular investment will be within the fund. Let me stop there actually and ask if are there any questions.
Hi,
Say,
Daniel.
gentlemen. Oh, go ahead, William.
In this example, you kept the investment amount as at 25K, and that do I assume that that's how the club will be also ran?
I'm sorry. What was that last part?
In this example, you kept the amount at 25K. Am I to assume that that's how the club will also be ran, is with a 25K investment?
So 25K is simply the minimum on the investment. You could put 100K in if you want.
Okay,
It's just the minimum
the
amount.
minimum.
I'm probably not being a good marketer, always showing the minimum amount as being the amount that goes in. So that's just the minimum amount the fund will
Okay.
invest.
But is it in 25, 50, 75 increments then?
Yes, it is.
Okay,
Yes, it is.
got you.
Let me go through the legal paperwork and verify that. I believe that's the case.
Hey, Daniel.
Yeah.
Let's say you have these 3 deals, right? And a person A invests in the third deal, right?
Mm-hmm.
How are the profits distributed after 3 years? It's a general fund, right? It's a collection of all the deals that are going
Mm-hmm.
and the money that the fund is bringing in after 3 years if that person wants to exit, and not necessarily uh, like he's exiting from the third deal or anything like,
Yeah, so first of all, we have a fund administrator who regularly administrates very large funds called NAV Consulting, and I'll get to them in just a moment. NAV Consulting will look at the date at which you invested, and just like a mutual fund, you start receiving benefits based on the date in which you invested. And so the NAV Consulting will do all the accounting to see, this is the day that this particular person invested. Here is the income and tax benefits they're going to get from that point forward. And here's the appreciation that they're going to get from that day forward. So we have a professional firm who's doing the accounting, and they will basically track the date in which you invested, and your returns are based on that date. Now, even though your returns are based on that date, you're still an owner of the fund, and the fund is allocated at 25%, 25%, 50%. And you'll receive those benefits based on the date at which you invested, and of course, the date in which you exit.
got it. Thank you.
Yeah. Any other questions? Good questions. I see quite a few going into the chat here. Let's see. Jelen, you're asking the investments are 25K increments. There's no option to do 30 or 35. Let me look at the legal docs. I think it said that increments are in 25K amounts. I honestly don't have a strong opinion one way or another. So I think right now I'll safely say that they are in 25K increments. And I'm going to go check the legal docs on that. Glenn is asking subsequent dollar inflows after these deals examples occur. Will they be allowed to enter the same deals? I think I answered your question with William's question. Caesar is asking, what happens if a portion of the members decide on a particular investment instead of all members in your examples? Well, it's fairly simple. I mean, if a smaller number of investors decided on a particular, let's say we bring in a mortgage note investing group. They have a fund for mortgage notes, and they have gone through due diligence, We're introducing them to the club as a club fund speaker, and then their presentation, it's not that great. They don't really do a good job. They're not really attracting people. They attract some people, but not others. But we have enough people that are interested in order to make the minimum investment. We'll take those people that are interested and we'll put their money into the fund, and the fund will allocate that amount of money to that particular investment deal. And so what happens on a practical level is that if some members decide and some don't, what that means is there's going to be a smaller allocation of that within the fund. So maybe it's a 2%, and somebody who absolutely hits it out of the park, they've got a great investment, great presentation, maybe they're 10% of the fund instead of 2%. So the influence that the club has is, first of all, do we hit the minimum investment amount? And then second of all, based on the level of interest, that's what our allocation will be. Okay. Sherwin is asking, if prior investors in deal one and deal two are not interested in deal three, does the club consult the existing ones before investing in deal three? So it is a fund, meaning that when you buy into the fund, it's a packaged set of goods. So we have the goal of investing across 7 to 10 different asset classes, and that is if there's enough people that want to put money into that fund, that is what we'll do. All right. Any other questions?
I have a couple questions.
Yeah, Thomas.
First one is, you said an email will go out to see who's interested in investing in the fund. And
Yeah.
my understanding is it's your job to verify with each of those investors that they meet the accredited requirements.
Yeah, so the fund administrators, NAV, are going to be the ones that verify with you that you meet the investor requirements. So I'm not actually going to have anything to do with that. What I will do is tell you that NAV, and where are they? This it? Yeah. NAV uses a group called Parallel Markets. And I'm going to share this out there for anybody who's here. You don't have to be interested in the fund in order to do this, but Parallel Markets will give you a free letter of accreditation. And what happens here is basically you go to them, you prove to them that you are an accredited investor. They will ask for bank statements, for investment statements. If you show them the documentation that you have the qualifications to be an accredited investor, they will give you a letter which will validate that you are an accredited investor. I'm looking for that right here. Thought I had. Oh, yeah. Here's what the letter looks like. So I got a new accredited investor letter from them June 12th of this year. And basically, it's just a statement from Parallel Markets saying, we agree that they qualify. It takes about 2 to 3 days if everything goes smoothly in order to get this letter. And I suggest you do it. I mean, this letter isn't just a requirement for the club fund, it's a requirement for any 506c fund. So if you're interested in investing with someone who only offers 2 accredited investors, you're going to have to get one of these letters.
Is that good for life, or do you need to redo that every handful of years?
I believe it's good for 3 years.
Okay.
I can tell
I don't
you,
see it
Daniel.
actually in here. I think the email that they sent me said it was good for 3 years. But each, Parallel Markets can basically state how long they want it to be good for. It's
Daniel, I think the guidance on this is RM High. The guidance on this from my SEC attorney was it's good for 5 years unless the people that provide you the letter date stamp it, which many of them do, right? So in other words, if you have something from your CPA, like we take things from somebody's CPA, and if they don't say, hey, this expires at a certain date, then the rough guidance is you can probably count on that for about 5 years. But then after 5 years, you might want to re-up it. But many of these pay for example, Parallel Markets is a paid service. They're going to date stamp it and usually say, hey, this isn't going to expire on a certain date just because they want to make more money to have you back in.
Yeah, let me clarify that. The first time you do an accredited investor letter with them, it's free. After that, they charge a fee. I have to send these letters out to anyone that I want to invest with, or oftentimes to banks if they're validating something. So I do it so often, I just have this information all in my Google Drive, and I just send a link off to them. So for me, I actually keep it all organized and online so that it's as easy as just sending a link off to these people. The first time you do it, it's going to be a little bit of work to organize it all, but I suggest once you do it, keep it organized so you have that. All right. I'm going to go a little bit faster here since Dennis, go ahead and ask your question, then I'm going to go through the rest of the presentation.
Sorry, it's just a follow-on question, and I don't know if you know how to do this, but one of the things that I ran into with this is since some of my investments are in crypto, sometimes they're just in a cold wallet somewhere, and it's really hard to, like, it doesn't really generate a bank statement, if you know what I mean. So is there a way to somehow talk to someone and prove that I really have control over those investments, or do you know how that works?
In that particular case, you'd have to go to the person who is running the Bitcoin investment and say, where's my legal documents? Or can you give me a statement showing my account balance? You have to get that documentation from the person that you've invested with, and then present that to parallel markets or somebody else.
Okay.
Okay.
Thank you.
All right. Collective bargaining. I'm going to skip over this. I think everybody knows what collective bargaining is. We can get slightly better deals by bringing larger amounts of cash in. Here are all the fun details at a glance. We're targeting 12 to 15% annual return, 6 to 8% cash yield. There's a preferred return of 8%. Minimum investment of $25,000. There's a 1% fee on invested capital. Minimum holding period 3 years. Expected holding period about 5 years. The profit split is 80-20. We're going to be doing monthly distributions. It's for accredited investors only. It's going to provide one consolidated K1 form, and our legal counsel is Gao Law. Whenever we have legal questions or we need, paperwork. Our fund administrators are NAV Consulting, and our accounting firm is also NAV Consulting. NAV Consulting will also run the investor portal, and if I skip down here to this area, they designed the mobile app. So this fund will have a mobile app that you can download, and you can use it in order to monitor your investments or receive updates. So that's the fund in a nutshell. The whole purpose of it is to keep the fees low, the minimum low, to have decent returns, and to make it easy to say yes, maybe, on the speaker that you like the first time. And if there's a speaker later that you like, say yes again. All right. And with that, I'm going to turn it over to Brett a little bit here. Brett, let me show you, if you're there. Let me show you the two slides that I included for DLP Capital. I'm only going to give you like 3 minutes, but basically, and if Brett's not there, DLP Capital, their lending fund is a $1 billion fund. They've been in operation since 2014. They've given a regular monthly distribution ever since then. They target first position secured liens. It's organized as a REIT. They have first position liens. They focus on affordable housing. So their mission as a company is to have an impact in the area of affordable housing and to make housing more affordable for more Americans. So that's their stated core value and goal. They invest with low loan to value ratios and are the lien holders on the mortgage for these properties. So they'll go in and they will fund the mortgages for the construction of entire subdivisions. And that's what they do. They are targeting a net annual return of 9 to 10%. 13.19 has been their average since inception. They have an 8% preferred return and a 90-day redemption period. And this 90-day redemption period is one of the key reasons why they're the first people that are going to be in this fund, because we can put capital into them, get a good return, and then if a great opportunity arises later, we can reallocate that capital fairly quickly within a 90-day period to a different potential investment. So think of this as, storing it in treasury funds, except for it's got a better return than treasury funds. These are the liquid portion of the fund. And this liquid portion of the fund is going to allow us to meet the cash flow that the fund is promising investors, but also give us the flexibility of putting money into the fund ahead of time so that when good opportunities arise, we can place that capital. And I guess that's all I will say about DLP Capital, other than they have a investment talk. Go check it out. I'll have the link at the end of the meeting. The second group that we're going to be investing with is called Web Street. Web Street is a fund. They put together funds. They're actually on their 8th fund that invests in software as a service businesses. And so they have expertise. They came from Empire Flippers, which was a big name in buying and selling of SaaS companies. And they have expertise in finding SaaS companies that have a good product and placing operators or managers, owners within those companies that know how to scale them, 5x them, 10x them. And so their whole business model is find software companies that have a great model and help them grow that company. So Web Street is the next investment, and we have a presentation based from them. The third group is DW Oil and Gas. Now, DW Oil and Gas, I would love to put them in the fund because I think they would juice the fund. They would give great returns. Unfortunately, after talking quite a bit with the lawyers and the tax accountants, we cannot put them in the fund, basically because one of the big incentives to oil and gas is that the tax benefits can be used to offset your active W-2 income. And when we put them into the fund, unfortunately, that active income tax benefit is converted into a passive income tax benefit. And so if it were done through the fund, that would be converted into passive income. So what we're actually going to do is we're going to create a separate limited partnership, which is what is required in order to pass that active income through. And we will run the oil and gas deal separate from the fund. All right. We're at the end here. Here are the resources for the 3 groups that I just mentioned. Please go right now and fill out this form. This is just a little feedback form, and I'll show it to you in a moment after I drop the link in the chat. Here's the form. Basically, it's just going to ask you, oh, no, where'd it go? Here it is. Are you interested? What's your name and email address? Are you particularly interested in any one of these 3? Would you particularly like to exclude any one of these 3? Do you have any thoughts or suggestions? And do you have anybody else you think that I should look at as a potential club fund speaker? So if everybody could go and do this right now, I would really appreciate that. And with that, I'll take questions.
Daniel, did I hear correctly? You said that the oil and gas one can offset active W-2 income?
Yes, it can.
Okay.
Yeah, that's why we're running it in a separate entity. The legal structure of the fund isn't set up properly to be able to pass that tax benefit through. And it can't be set up properly. Oil and gas requires a special legal setup.
Okay, so that's going to be a separate presentation that we can learn more about later.
They actually already have presented, but I will come with here's the presentation. Great picture. I will be sending out a call as soon as we have this one set up completely.
Okay, cool.
And Daniel, is that oil and gas same deal in the sense of accredited investors only?
It is accredited investors only, yes.
As well, okay.
Yeah. Like I said earlier on, I've been reviewing a lot of deals, and I've seen quite a few 506B deals recently that would be worth diving into and doing the due diligence on to see if it'd be worth bringing to the club. I'm not going to leave the unaccredited investors behind. This is an accredited investor fund, but I want to make sure that I'm actively working to create paths for both groups. So
thanks.
Somebody here is asking for the link for the accreditation letter. You could just find that at parallelmarkets.com. I think it's lost it here. Oh, yeah, there it is. I'll drop that in the chat also. Any other questions? Will you share the presentation deck with us? Yeah, sure. Here it is. Anyone with the link can be a viewer, and I'll drop that link in the chat. There it is. All right. Can you join the fund as an LLC or an S Corp? I'd have to look about S Corp. I know you can join as an LLC. I wouldn't be surprised if you can join as an S Corp. Their NAV here. Here's NAV. They had a large number of options for how to enter into the fund. One of the things I didn't like about NAV actually is once you request to be part of the fund, they'll send you this email. It comes branded as NAV. I wish they had a way that I could whitelist it, or white label it rather, and make it come as Alternative Investing Club. But when you get an invitation to invest in the club, this is what it'll look like. Fill out that form. Anybody who fills out that form, I will follow up with and give you all the instructions for quirks like this to look out for. All right, with that, I'm not going to say take yourself off mute, but I hope you have a great weekend. If anybody has any questions, I'll hang on for a few more minutes.
Thank you, Daniel.
Yeah, Dennis.
Is the 1% fee, is that the entire fee that we're paying?
Mm-hmm.
Including the stuff that, you obviously put in a lot of work that includes all the legal fees and all the everything.
1% fee is to me for the work that's being put in. Legal fees come out of expenses within the fund.
Okay, got it.
Hey, Daniel.
Yeah.
I know this might be a bit of Pandora's box,
oh
but
boy.
There's been a debate in the past about accreditation and the mechanisms to get accredited. There's pretty standard definitions, and those are all Googleable and whatnot for anybody who's interested. But I know there was one that was recently added around this idea of being sort of an education-based as opposed to a financial-based mechanism.
Yeah.
I'm wondering if it's if being able to sort of maybe talk about that to the club as a means, especially if there's a good chunk of the population here who might not otherwise qualify, that might be a way that they can qualify and then figure out if they want to join the fund.
So what you're referring to is last year the SEC expanded the definition of accredited investor to include various financial industry certifications to being accredited investors also. And the main reason for that is that the financial services industry had people who were financial advisors who were advising accredited investors, but they themselves were not accredited. And so there is kind of a rat's nest of you can qualify this way and this way and this way. There were like 20 different options when I looked at it, and I didn't know what half of them were. But most of them involved basically getting your Series 7, investor advisor license, or you're getting some type of license from the SEC. Honestly, I don't know that that's the route that people in this club should use. You would have to spend a lot of time studying and passing all the exams in order to become an accredited investor that way.
I did say it was Pandora's box, and I understand. I'm just thinking if it's, again, it's all about education. So if there is somebody who might have an interested path for that is an option for them to pursue if they wanted to.
I think it's a great idea to actually go in and look at what all the qualifications are now, and maybe have that as an intro bit. Show people, hey, there's an updated version of the accredited investor definition, and here's all the ways you can do it. And maybe there is an easy way that could be used by people in this club. I've been told that there isn't, but I haven't gone into all the different ways of doing it in enough detail to know.
Sure. Anyway, food for thought.
Yeah.
Thanks. See you later.
See you later.
Daniel, Shashi, just question. The fees is 1% on invested capital. This is one-time fees, or it is per year, or?
It is a annual fee.
And what about the profit split, 80-20? So what do you mean by that?
80% goes to the limited partners, 20% goes to the general partner at the sale of an investment. So it's very, I took the most typical terms that are out there in the industry, basically.
And the 20% profit is after some guaranteed return, or?
Yes. Yeah, it's after your preferred return. It's after, of course, you decide to exit.
Got it. Thank you.
Yep.
Hey, Daniel. So I was going to ask, can you elaborate on the preferred return? Can you explain that a little more?
Sure. So on the day that you invest in a syndication or a fund or anything that has a preferred return, your preferred return will begin to accrue, meaning that it's money that is due to you, although it may not have necessarily been paid out to you. And so 8% is the amount that the fund needs to perform at before the general partners get anything. So it's an amount that says that when this fund operates, the first 8% of the profits that it generates will be given to the limited investors. So that's what preferred return means. And that's why preferred return can be different than cash flow too. You might have a situation where the preferred return is 8%, but the cash flow is 6%. Well, in that particular case, if 6% is paid out by the fund, then the investor is getting 6%, but they're due 8%. And whenever the investment generates more than that 6%, they're going to have to fill back in that extra 2% that has been missing. So it's the first 8% of profit generated is due to the investor. Does that clear it up?
And when is that paid out? Is it at the sale or is it in the cash flow?
It can be in either. So it's just when payments are sent out, the first 8% are to the investor.
And then
if a deal is suffering from low cash flow, it can definitely be made up when the deal is sold. In a more healthy deal, hopefully it's all paid out in cash flow.
And it's not a function of the amount that is invested. It's sort of fundamental to it would apply for the minimum amount. That's what I'm hearing.
Oh yeah, it would. Yeah.
Okay, thank you.
It applies across the board to everyone. All right, Naveen, did you have a question?
Yeah. Hi. So when the fund sells its position in, let's say, DLP Capital after a few years, I think you said, did you have a sort of a time horizon for that? First question. And typically, what is the return or the growth and value of that position?
Brett's on the line here. He could speak to that. But from a fund's perspective, they are an investment that we are making, and the benefit of that gets passed through to you as the investor. They, like I said, they have a 90-day redemption period or on written request, which means that they're a more liquid fund, which is why they're the first investment that we as a fund are making, because it allows us to place our initial capital in a vehicle that's more liquid. Is that answering your question?
Well, maybe I'll just use it. So let's say the fund as a whole, after the collective, everyone's put in their money, is $1 million, and that's what we invest into DLP. At some point in time, you as the fund manager would decide to exit that position. Is that expectation of, let's say, it becoming 2 million, like the equity value of that? What is that typical, I guess, that value that you've seen with these kind of positions? And is that above beyond the monthly dividend that you provide?
Yeah, so each investment is expected to perform, of course, and I took this directly off DLP's tear sheet for their lending fund. These are the metrics that they're reporting that have been their historical averages. And so more than likely, we would not sell our entire position. DLP Capital in particular, like I said, is going to be our vehicle for holding capital and getting a good return on it. And if necessary, we could sell some of it in order to get into a different deal if we wanted to. So it's kind of our better than treasury bond vehicle that we're using. I hope that wasn't a poor way of representing DLP, Brent. Go ahead.
No, and I can speak to that a little bit too. With the lending fund specifically, the underlying investments that we're making, they are loans, right? They're senior position loans. So the distributions ultimately that we generate, are derived from us collecting interest on those loans. There isn't an equity investment as if you were going out and buying a physical property yourself. So when we look at the lending fund and we say, we target 9 to 10% net annualized returns, that is going to be inclusive of everything that has been distributed to the investor in the fund, i.e. in this case, the Alternative Investing Club fund. But there isn't going to be additional equity growth to the lending fund position, really because, again, the interest is already being paid out. And really one of the qualifications with the REIT tax election that the fund carries is that at minimum, we're paying out 90% of the taxable income that the fund otherwise generated. So really you're seeing everything paid out on a monthly basis.
Got it. Okay. Thank you. That makes sense. Yeah, thanks a lot.
And Jolyn, just to answer your question, right now I'm the general partner of the fund. I am potentially looking for another person to work with me on the fund, but currently I'm the sponsor and general partner and fiduciary responsible for the fund. All right. Any other questions? I'll stay on a few more minutes. It's always interesting to see if the 28 people that are there are actually here or if they just walked away at some point. Sorry, I heard a question.
Question about the cash flow. Have you ever come across a fund where you maintain an interest in the cash flow in perpetuity?
I mean, potentially that's what DLP could be. I don't foresee any reason that we would sell our entire position in DLP, because their cash flow is the large benefit of, at least in my opinion, that and their liquidity of their offering. So my philosophy in general is to hold these as long as possible, but be vigilant in evaluating them on a regular basis to understand if it is a proper time to sell or not. If it makes sense from the investor's perspective and it's going to maximize their return, we'll sell. Otherwise, my philosophy is that we should hold these as long as possible. And you, of course, even though the fund is holding these properties, you, of course, can buy in and out of the fund. So you can exit at any time you choose after 3 years.
Okay, thank you.
Sir, Brett, was there anything that you wanted to say to the group from DLP Capital? I know I didn't really give you too much time there, but if there's anything you need to clarify, I didn't say a whole lot about the group, just that you were going to be our first group, and go back and watch the video that Andrew Davis did earlier.
Yeah, no, I appreciate the opportunity to be here and being the group's first investment. I think really the only thing that I would add is, from the investment side, this investment is specific to the lending fund itself, and really what the strategy is there. But ultimately, it's also understanding too who the group is, who DLP Capital is, and really what it is our mission is, and really simply put, we invest in the building of thriving communities, and we do it through the financing and development of real estate, and then we also build and acquire our own real estate. So as an organization, there are 25, 30,000 plus units in general that we own, that we manage, that we've acquired over really what our portfolio is right now. So it is much more than just one fund.
Yep. All right. And I know, Brett, that we have a meeting on Monday, right?
Absolutely. Look forward
I'm
to
so
it.
sorry for missing our meeting on Thursday. I worked right through it and didn't even notice that I had done that. So I'm apologizing for that.
It happens. No offense taken.
But I'm looking forward to putting together some educational content for the group here. All right. I guess with that, we will close the meeting off. Have a wonderful weekend, everybody.
Thanks.
Cheers.
Thank you. God bless.
Thank you.
Thank you. Bye-bye.